Hey everybody, Mo here. Today we're following up on that SEC filing we talked about in the last episode by Trulieve, a recent Kim Rivers interview, the ousting of a CEO, and a couple of other items. Welcome to the Monday, October 18th edition of Mary Jane Markets. This is a show covering the developing news of the North American cannabis sector, as well as analyzing a few of its operators, Cresco Labs, CURLF, Green Thumb Industries, and Trulieve. The goal here is to do all of the due diligence I normally do as an investor in these companies, and then provide that to you in a concise episode so you can stay updated. And hopefully you find that valuable. Sorry if my voice sounds a little weird today. I am a little bit under the weather. A quick check-in with the markets before we dive into things. Everyone's least favorite color showing up again, as our MSOs are down between 1 and 4%. The broader market did start a little choppy this morning, but then did end up finishing up. We might have to settle into this, as the next 3 to 4 weeks before earnings might be pretty quiet. First thing I wanted to talk about was a follow-up to the Form D filing by Trulieve that we talked about in depth in the last episode. The TLDW, for any new listeners, is that on October 13th, Trulieve filed a Notice of Exempt Offering of Securities form with the SEC, stating that on September 30th, Trulieve raised $66 million via debt from 14 investors to be paid back in or under a year, and the transaction was unrelated to the Harvest acquisition. I dissected all of the relevant sections of this form in episode 27, so if any of you new listeners want to check that video out, in the description I've labeled where the chapters start so you can skip to that section if you don't want to watch the whole thing. But we left off last episode with a mystery on our hands. Trulieve doesn't say in this form or elsewhere why they raised this money. Furthermore, the terms and the timing of the deal are very strange. We know that concurrently with the Harvest Health acquisition on October 1st, that Trulieve raised $350 million. I covered this in a previous episode as well, so be sure to check that out if you're lost. So given all that, raising another $66 million was a little odd, mysterious, suspect, whatever adjective you want to use. Well, since then, I've reached out to investor relations about this, sending them this email in which I asked, is there any more information on this $66 million note? What is the purpose/intent of raising this $66 million? And I went on to ask, for reasons I'll explain in a minute, if you cannot give out any more information, can you tell me if I'm reading this form correctly? By my understanding, on September 30th, Trulieve raised $66 million via debt from 14 investors to be paid back in or under a year, and this is unrelated to the Harvest acquisition. And Christine Hersey, Director of Investor Relations at Trulieve, responded back to me today. Thank you, Christine, for the prompt response. Her email was short and sweet, saying, we don't have any more specific color on this filing to provide. Your reading of the filing is correct. So this is the response I expected. Typically, if a company wants something to be public, they will make it so. I didn't expect her to give out any new or privileged information. If they had something to announce, they'll announce it publicly, which is why I followed up with that second part of my email. I wanted to make sure that I was reading this correctly and I wasn't missing anything either in this filing or elsewhere. It was pretty straightforward, so I didn't think I did, but it doesn't hurt to double check. So, being a discerning investor, I have to ask, what's up with this filing? Why do they need this cash? I can answer the first question partly. When a company makes an offering like this, they must report it to the SEC within 2 weeks' time. So the deal took place on September 30th, and the filing was made on October 13th, so that lines up. That second question on what this cash is intended for, we kind of have to be an investigative journalist about this and try and deduce that. So, another thing I did this weekend was take a look at their financial statements. This is Trulieve's second quarter 10Q. For those unfamiliar with 10Qs, this is a quarterly filing, a report that the company has to make with the SEC and provide a variety of information to both the SEC and investors, and part of this includes the company's financial position. So this is the balance sheet which they reported with the filing. Sorry if I'm boring anyone, I don't mean to insult your intelligence, but I know not everyone is knowledgeable in financial analysis, so I want to give these quick summaries so people don't get lost. So a balance sheet is a snapshot statement at a point in time of a business's assets, liabilities, and equity. So this is a snapshot as of the end of the second quarter, June 30th, because obviously things like cash and inventories and accounts receivables and payables change over time. So there are different categories or types of assets and liabilities. We're not going to go over every one of them here. Of the ones I do want to highlight, one is under current assets. that's cash and cash equivalents. That's all cash and securities that can be quickly converted to cash in the current period. And Trulieve is reporting they have $289,238,000 of cash and cash equivalents at the end of Q2. So that is a lot of money they have on hand. Now, I'm not sure if I've mentioned this yet, but one of the initial worries some investors might have when they analyze that Form D filing where Trulieve raised short-term cash, remember that was for a period of less than 1 year, some people might be concerned that they have a cash problem. Maybe they're strapped for cash and they need a bridge until that other $350 million comes in. I could see how there would be some healthy skepticism about that. But looking at the financial statements, we see they have $289 million in cash and cash equivalents on hand. But that's not quite the full story. We also have to look at the other side of the balance sheet to their liabilities, because although you have all of this cash going into Q3, Trulieve also has bills to pay. So the outstanding current liabilities here as of the second quarter, if you add all of these up, all of these liabilities that are coming due, like accounts payable, any current portion of debt, their leases, that comes out to total $76,738,000. A really common metric in the financial world used to determine if a company can meet its short-term obligations is something called the current ratio. That is current assets divided by current liabilities. So Trulieve's current ratio as of this filing is 5.7, which means that they can pay off all of their obligations coming due 5 times over. Some other things to consider are: 1, if Trulieve was a money-losing company, they'd obviously need to use some of this cash to make up for that operating shortfall, but they're not, so we don't need to consider that. And second, we can look at their statement of cash flows to analyze their financing and investing activities. Because the income statement only tells you the performance of the company's operation in that current period, you also have to look at the statement of cash flows in order to determine if a company is strapped for cash. So just hitting second quarter's highlights here, the net cash provided by its operating activities was $49.1 million. And then they made a number of investments, as you can see here. These are longer term investments that aren't accounted for in the income statement, and the net cash used in these activities was $136.7 million. There was also some financing activities that took place, and the net cash provided by those was $230 million. Summing those totals leaves them with a positive net cash balance at the end of the period of $289.2 million, which was the first number we looked at on the balance sheet. So to wrap it up, what did we learn from this? We know that prior to this $66 million raise, Trulieve had a really big cash balance at $289 million. We also saw that they've been a profitable company, so they don't necessarily need this money to operate the business. However, from the statement of cash flows, we see that they have been investing heavily. In the last period, that was greater than the sum of the cash provided to them by their operating activities. That's certainly likely to continue for a time. I don't think it's illogical to say that they're raising this money for investing activities since they clearly don't need it for their operating activities. I certainly wouldn't fault anyone for that, but the timing is throwing me. They entered Q3 with $289 million. On October 1st, they knew they were going to raise another $350 million. So why one day before do you raise another $66 million if it's not for a very specific purpose? I could dig a little bit deeper into this and try and estimate their investing activities for the third quarter, but my intuition from just following the company like we've been doing the last couple of months together is that that's not some outlandish number that destroys their current cash position. So maybe Trulieve is waiting to announce something, or maybe following November 15th's third quarter earnings, we'll get some more information on this transaction. But I think unless one of those two things happens, that's about all we're going to learn here. So I do apologize that after all of that, we didn't come to a definitive answer, but I think we can pretty confidently answer that Trulieve is not strapped for cash. Alright, sticking with Trulieve news, there was also this Associated Press article published today featuring an interview with Trulieve CEO Kim Rivers, in which she talks about the company's hub strategy, the Harvest acquisition, safe banking, and the pandemic's effect on the company. So pretty short interview, but if you're like me and like to consume everything, I wanted to put it on your radar, and it's kind of cool to now see this kind of stuff in the non-financial mainstream media. Next, I wanted to talk about the abrupt ousting of Hexo CEO Sebastian St. Louis. I don't cover Hexo on this channel, but I try to keep on my radar the general news of other companies. Anyway, the reason I wanted to talk about it is to highlight it as a cautionary tale that we as investors in this rapidly developing and often difficult to make sense of sector can learn from. So just a bit of background on this. Hexo's board unanimously voted to fire the CEO after receiving an activist letter that demanded his resignation. BN and Bloomberg got a hold of that letter, and they reported that it was due to his poor stewarding of the company's finances. The strong quote that really stood out was, The company has not implemented appropriate operational or financial strategies, and its performance has lagged peers and market averages. The executive and board compensation has not focused on the right metrics, the right timeframes, or the right targets. The company, under CEO Sebastian St. Louis's leadership, has not acted in the best interest of its shareholders. Again, this is completely unrelated to and doesn't affect the MSOs I cover on this channel, but I thought it served as another good reminder in this industry at how supremely critical proper due diligence, proper judgment are when it comes to investing in this industry. What are you doing when you invest in a business? You are taking an ownership stake in a company based on the understanding that the operators of the business will execute on a plan that will provide a return on your investment. And doing that due diligence every single day isn't an easy thing to do. And I couldn't find a source that was doing it to my satisfaction, which is why I started the channel in the first place. And hopefully I'm doing that for you. And if I'm ever not, please provide feedback in the comments, because that's the whole reason this channel exists. Alright, that is it for today. Thanks so much for listening. Sorry if I was on my soapbox or droning on about some things. Let me know in the comments if I went on too long about that Trulieve filing, or if there's anything else I can be doing better. Please like, subscribe, all that good stuff. If you want to interact with me on Twitter, my handle is @MJMarkets. I also have a Patreon page set up. That's patreon.com/MaryJaneMarkets. But at this time, all I'm asking for is that you share this video out with one person that you know that's interested in the sector, in the market, or to any places where investors talk about this stuff. It really does go a long way in helping me grow this channel by word of mouth. Thanks so much.